Hello and welcome to Business Today. I am Siddharth Zarabi, and joining me now is Rajiv Memani, the President of the Confederation of Indian Industry and Chairman and CEO of EY India. Uh, Mr. Memani, thank you very much for your time with us today. You are speaking to us in your capacity as the President of India's largest industry chamber, and therefore I want to ask you for that first big point that must be on the minds of all CEOs, which is India's ongoing trade talks with the United States and what your own sense in terms of expectations is on behalf of Indian industry.
Yeah, thanks, Siddharth. I would first, as a prelude, what I would say is that, obviously trade discussions take a long time. And this got started maybe 6 months back. And I must compliment the government with the amount of time that they have spent with industry, with each and every sectors, subsectors, going into tremendous amount of detail, understanding each issues, opportunities, challenges. And I think CI has been part of many of these meetings, sectoral meetings, and the details to which they have gone, I think gives a lot of confidence that any trade deal that they do, and we know the approach of this government. I don't think once they fully understand what the issues are, they will not do anything in a hurry, haste, or under any pressure. And whatever they do will be in the best interest of the country. So definitely, I'm CII members are keen that if the overall interests of India are protected, and if a trade deal gets done, it's positive, and mainly for I would say two reasons. One is the more sort of short-term reason of tariff, of a retaliatory tariff of whatever 26% being imposed, and that being relatively uncompetitive to some of the other countries which India competes with for exports, particularly I would say Latin America. And the second is any trade deal with a country not only is about tariffs, but it also signifies a broader level of economic interest, strategic alignment between two countries. And I think a trade deal with US would definitely be reflective of that. So I think industry, subject to obviously getting a deal which is a win-win, because otherwise there's FTAs don't get signed, and reflects the aspiration of India very well. Subject to that, I think industry is keen if a trade deal gets signed. I think it's very difficult for me or for anyone to speculate when it will get done. I mean, you've been around, I've been around. Sometimes these things get stuck for the smallest of things, and sometimes if two countries are intent on doing something and creating a win-win scenario, they work together and ensure that they take it off, past the line. Especially given the fact that this is one tranche of a more comprehensive deal. So this is not the comprehensive deal today, so everything has to be agreed, finalized today. But if there's something that is more requires more dialogue, requires more consensus building, requires more understanding of each other's situation, those kind of things can be always deferred to tranche 2 or whenever tranche 3.
Absolutely. And this is very pivotal and important because remember, viewers, as the CII president was saying, China is our largest supplier and the United States is our largest buyer. And in some ways, we are caught in the middle in the evolving global trade order. Along with the trade engagement, and it's not just the United States, there are many other similar pacts that are underway in terms of negotiations. What do you think the government needs to do on the domestic front from giving a further impetus to reforms?
Yeah. No, Siddharth, I think the government has been doing a lot. Even if you look at the last 1 week, bringing out the scheme on R&D, bringing out the scheme on ELI, which were announced in budgets a while back, but in getting them on the ground, putting the details out, I think is good. And also setting up the manufacturing commission, because now a lot of reforms that are required are actually required. They're not relating to one ministry. They're actually span many ministries, and also states play a much more pivotal role than center. So creating a commission like that really helps in creating a platform where all the issues can be discussed, all the stakeholders are there, private sector also participates in that. So I think building that infrastructure, building that institution, and moving that forward is very important. And the second is the high-powered committee on ease of doing business, on regulatory reforms that's been created. That again encompasses various governments, state governments, various ministries. So I think these two are very important. And I would say, if given that there are three, four things from a manufacturing standpoint where I think competitiveness is can be focused on. One is, if you look at PLI schemes, about in whatever name, form, shape you can give. Some are PLI, some are called something else. But incentive for manufacturing, if you use to broad nomenclature, there are about 18 schemes that have been launched till now. Total allocation for them is in excess of 3 lakh crores. About 30,000 or some number in that sort of order has been utilized out of that. And some of the schemes have been very successful, like electronic scheme, or semiconductor has a massive allocation. It's also got good reception. 4 participants have come forward. Uh, Defense has done well. Some have done reasonable. Some have done sort of partly achieved the objectives, and then some that have not. So I think those PLI schemes that haven't fully achieved the objective, we must first ensure that those PLI schemes are modified to say that the purpose for which they were created is achieved. And some newer PLI schemes, specifically in areas which are labor intensive manufacturing and in areas which deal with more advanced manufacturing, I think they are very critical that we get that. So I would say that's first level, that's very important. The second is, if you have to make manufacturing competitive, the factor cost of production have to come down. So whether it's land, whether it is logistics, whether it's energy, I would say in logistics and energy, costs have come down as compared to earlier, but there's still some ways to go. There are things that we can do which can make India even more competitive. So in energy, as you have more and more renewable, the transmission infrastructure has to grow at a much rapid pace than where it is today. I think that acceleration needs to happen. Distribution structure needs to be efficient so that you don't have cross subsidies happening. So whether you can privatize the way some states have done in the past, what UP is doing right now, you can also look at listing. You can also look at creating more franchise structures through which you privatize. We talked about open access. That's not been implemented in many states. So if you can create more open access and get that implemented, so your energy cost becomes even more competitive. And land is something where we need to do more work, because if you really want to build manufacturing at scale, then you need the availability of land at reasonable cost and fairly quickly, and unencumbered land. And I'll not get into the details, but there are a bunch of things which CII has recommended to the government from land standpoint, what can be done. The one place where you see as which has been very successful from a manufacturing standpoint is electronics. And one of the things you had in electronics was you had a very good PLI scheme, and you had some very good anchor tenants who came and who developed. So as India needs to hook up into the global value chains of 5 or 6 sectors where India has either a big demand or has competitive strengths, and ensure that we get the big players in, help them settle in, get the right incentive scheme structure, ensure that the duty structures are attractive, and then push the manufacturing. Once they come in, the other ecosystem players will start coming in, and the whole thing will become much more impactful and much more effective. So I would say the linkage with the entire global value chain also becomes very critical. And then there are just the ease of doing business, whether it's environmental clearances, NOCs, number of approvals that are required to set up a hotel, number of approvals required to set up a hospital. If you have to set up a hospital with a diagnostic center and a pharmacy, you have 300 approvals that are required. A number of approvals that are required to set up a normal manufacturing unit. I think we just need to compress the time for that. And MSMEs in particular need much greater support, specifically financial support, so that they can achieve the scale. Our government has taken some very good action there. But at some stage, if we can create a sovereign wealth fund, and park some of the disinvestment, go aggressively on some disinvestment, and create a sovereign wealth fund, which helps in working with the which is money is either used for MSMEs or is used for areas of so that India can build supply chain resilience in some areas where a lot of policy support and capital is required. I think that money will be much better utilized. Then obviously the government is getting dividends, share value appreciation is happening, but I still think the strategic gain that the government will get through that and the country will benefit from that will be much more.
Rajiv, how should companies as well as policymakers deal with this latest development of rare earth magnets being banned, and now Chinese engineers being called back, and that's clearly going to have an impact, at least in the short term.
Yeah, it's very difficult to question, Siddharth. I mean, I think there are no easy answers for this. I think there are some answers for the short term and then for medium term and long term, and also preparing for other forms where some of these things could happen. I think the only way I would say is looking at alternative sources and trying to see how, with the G2G support, alternative sources can be looked at with other countries who have surplus capacity or who have some capacity in this. And in the medium term, I think India needs to really rapidly accelerate and manufacture this. It's not easy. It takes a long time. These are minerals which are some of them are radioactive, so to take them out, extract them, get all the approvals for that, set up the manufacturing. A lot of the machinery technology is not sitting here. So, get tying, stitching that up, and then progressing that is the, I would say in the medium term, that's the only answer. But building an alternative base will be very important. I think it's a good wake-up call that we have been talking of supply chain resilience. We had similar issues during COVID. And in some industries, we have done well, like semiconductors, we are starting to make early progress. But in some of the other industries, we need to do better.
What's the mood in India Inc? Last 3-4 years have been of constant change and external concerns. How would you describe the mood of India Inc. amidst all that we are seeing on the external front?
See, I think if you look at what's happening, I'll break this into two. If you look at what's happening in India, I would say the picture is very positive. There is a lot of consistency in policy making. There is no knee-jerk reaction that's happening. Interest rates, inflation is headed in the right direction. Government is focusing on doing, we talked about ease of doing business and other things. That's working well. If you look at tax rates, they're fairly competitive. They're also talking of rationalizing GST rate structures. So overall, I would say, and people are hopeful that India will enter into a slew of trade partnerships, which will also open up opportunities in exports and others. Obviously, there will be sector to sector. There's frustration on some things not moving at the same pace at which one wanted. Projects that were announced are taking more time. If you sign for example, if you sign a renewable project or you bid for something, by the time the PPA is done, everything has happened. It takes 6 to 9 months. A lot of things change in that time frame. Transmission structure needs to be really built. So there are some areas of frustration, but by and large, I would say the positivity is very strong. And healthy, robust capital markets, robust fundraising environment. I mean, that always helps. Whilst the growth numbers may not be for all the industries may not be there, but still there is good positive growth. Margins are getting stronger. Return on capital employed metrics are very good. So I would say overall, domestically, there is a lot of buoyancy and companies are very positive. It's not true for all sectors, but I would say for a majority of them. If you come to the second part with what's happening globally, I think there is a short-term concern that this volatility is hard to, because of geopolitics and the just complete radical shift in the trade order, global trade order. I think that does for lots of businesses. It creates lots of concerns. In many cases, some of the economics are challenged. So that's creating a little bit of uncertainty. So even if I look at CapEx, some companies may be shifting that a little bit. And what was global focus? Renewable was a big focus globally. That's kind of dropped down.
Mhm.
Uh, Defense has become a big focus. So some of these things are natural, they happen.
But that's an important point, because I wanted to ask you that when we sort of take these issues to the government through our platforms, one of the things that we hear back, and I was recently with Commerce Minister Piyush Goyal, where he met a lot of foreign investors overseas, and this is private sector capex. You just touched upon it. Have the green shoots of the recent past now firmly taken root?
I would say, Siddharth, there is a lot of uh, there is not enough data that people have, and there's a lot of noise that private sector investment is not happening. If I can be more bold in my statement, whatever data points we have looked at, and when CII has done survey of their members, I think clearly private sector in the last 2 to 3 years, a year or two after COVID, I think private sector investments has picked up. The debt equity positions of companies are very strong. They know that markets are only going to reward if they have growth. There is not crazy M&A that's happening in India. So I think private sector is very clear that they have to expand, they have to invest if they want to grow. And if you look at the top 30, top 40, top 50 companies, some of them who have had their AGM in the last few weeks, if you go by their announcements, it's very clear that the posture is that they want to do more investments and everything. But some of the global uncertainty is impacting. And then you have one player, which many times where the price of the product really changes depending on where do they want to export and what price they want to export, or they don't want to export. So there could be one chemical product where the price suddenly crashes because they just take a position that they're going to export at bulk, and suddenly the demand supply scenario changes. Now that freaks out people when they are planning out large capex. So I think that is one area which is very hard for anyone to predict and tackle. But outside of that, and outside of global trade issues, I think people are wanting to move quickly. The speed gets altered because acquiring land takes a lot of time. It took time earlier also, still takes a lot of time. Environmental clearances for large projects take 12 months, 15 months, 18 months. NOCs, number of approvals take time. So by the time when a project is announced and the time it happens on the ground, it takes time. By that,
Absolutely.
and that period, that lag period, is something that unless we don't crunch that time, that lag period will always take time. And the other challenge now, for a lot of those companies who are looking at aggressive expansion, availability of manpower is a real issue. So I think, how does India rapidly look at skilling, and having a more scientific way in which they approach skilling is very important.
Absolutely. One final point, and before I ask you that, I completely concur on the land issue. And it took India's commerce minister to sort out a pending demand of a foreign manufacturing investor for 40,000 uh, square meters of land next to its existing factory, where there was just a wall in between. And it took him to speak with the state and get it sorted out. He did it in 1 hour, which was really appreciated by all the investors there. But one final point in all of this, how does CII and how do you see the possibilities for growth for the country and its economy this year, particularly in light of what the RBI has been doing? It's also opened up the tap on the liquidity front and gone easier on rates.
Yeah, I think the RBI has been, I think, one of the finest institutions of India, and over the last many years has done a pretty stellar job. But I would say, in particular, in the last 6 months, I think the proactive posture that they have taken, I think this tricky balance between risk, inflation, and growth. I think they've now started to be comfortable with risk and inflation, and therefore are, being very proactive in terms of supporting growth. And I think that we must admire the RBI for taking that stance, and they've been communicating very actively on that. And also, their headline news, but there are also lots of small little changes that they are making in circulars, policies, and everything, which is really enabling growth in a very significant way. So I would say from a CII standpoint, Siddharth, we are looking. CII's research team has built a good econometric model. We put 34 high frequency indicators starting from demand, production, monetary situation, and also external uncertainties, the global uncertainty index and everything else. And our view is that the India's GDP growth should be in the range of 6.4% to 6.7%, which is very similar to the ranges that other institutions have stated. And I think there is a high level of confidence. First quarter was disruptive because of global events, also because of geopolitical issues, and some sectors did get impacted because of seasonal changes, which is becoming a growing recurrence, year after year. Early monsoons, much smaller summer, shorter summer. So I think because of that also some, but still we believe that the growth should be, in excess of 6.5% in the first quarter. And as with the lower interest rates, lower inflation, better monsoons, better crop sowing, more stability in the global order, the growth should accelerate and pick up. And also the government is trying at its own pace, trying to see how we can accelerate the reform process. So I think there is overall confidence that the numbers that the government has put out, the numbers that CII has put out, should be achieved.
Absolutely, Rajiv, and we're all looking forward to how the current quarter also plays out. Thanks very much for your time with us today, and all the best for your agenda as the CII
Thank
president.
you
With
so much,
it's a
sir.
wrap on this conversation. We'll see you again. Until then, goodbye.
Thank you so much.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.